the SEC's new disclosure rules affect supply chain disruptions? Bryan House is a partner with the law firm of Foley Lardner. Hi, Bryan.
Hi, Bob. How are you?
Good. Thanks for being with me. Tell me about these new disclosure guidelines issued by the U.S. Securities and Exchange Commission.
Yeah, well, it's interesting because they're not so much new rules, but they are new examples of the SEC's focus on existing rules, given some of the things that we've seen in the last couple of years, obviously with COVID and with the crisis in Ukraine. The SEC is drilling down more on supply chain issues than they ever have in the past.
What is it asking supply chains or companies with supply chains to disclose?
Well, how those issues are affecting your business. It used to be, and for years, companies recognize supply chain risks. And so in the risk factors in their public disclosures, they would say that, we have a far-flung operation and there are supply chain risks. And that was enough for a while. But now that there are these a crisis, for example, in Ukraine or with COVID and supply chain issues, the SEC says it's not enough to just identify the risk. You have to try to quantify it. How are these? Give us details in your public filings. How are these supply chain issues affecting the business? And if you can, they would like you to quantify them for investors.
So again, so you just, I think, answered my next question. That is, the purpose of this is to create a sense of transparency for investors in these companies.
Right. Yes. So it's a combination of disclosing risk factors, but also there's another regulation in the SEC rules that requires companies to disclose what they call trends and uncertainties. So to the extent that there are trends going on with supply chain issues and uncertainties about being able to secure a product, the SEC wants you to disclose companies to disclose that and try to quantify it so investors can see it. If investors see that everyone is saying they have supply chain issues, how are they to, in the SEC's mind, how are they to compare companies to invest in? They really expect to see quantification and more details for investors to be able to make decisions.
Well, the quantification aspect, I mean, just how do you describe, it seems to me that these companies would be describing these problems in rather vague terms. Is not a particular benchmark or score or anything that they can tie it to. So how do you compare the disruptions of one supply chain with those of another in a meaningful way?
Well, that's a good question, and it's a challenge. And I think some of the disclosures that we saw recently with respect to semiconductors gives you some examples. I mean, some companies were able to really quantify the disruptions with respect to semiconductors, how that was going to impact production, how long those disruptions were expected to last. And that's what the SEC is looking for, to the extent that you can do it. And you can't always do it. It's very difficult, obviously, and I think the SEC understands that. But in the SEC's review processes, they are pushing companies to make more disclosures, to try to quantify things, and not just to identify potential risks if those risks are already, coming to fruition and affecting the bottom line.
In terms of what caused the SEC to even take this action, was there a sense that companies were not being entirely forthcoming about the risks and disruptions in their supply chains, or is that not an issue?
Well, I think COVID really changed the rules in so many different ways, right? I mean, that when in the height of the pandemic, the SEC was much more active than it typically had been, and so it was giving guidance, because companies, and we were talking to our clients every day. What do we do? This is unprecedented. This is unprecedented. And so the SEC came out with lots of guidance about how to handle certain situations, but pretty quickly it became clear that supply chain issues were a big problem. And so they came out with their guidance in 2020 about things that companies should be thinking about with respect to supply chain, and the things they were going to start looking at in public disclosures. And then the same thing happened, with in 21 with the Ukraine crisis. Again, the SEC publishes guidance. It's not a rule, but it's a kind of a notice to companies and to officers and directors that this is what we're going to be looking for, and this is what we'll be expecting.
Are there any kinds of penalties for noncompliance, or if SEC feels that a company has not been particularly forthcoming or detailed enough in detailing the risks that it is currently experiencing?
Absolutely. Those things tend to lag a little bit. I mean, the SEC has an enforcement division. So a lot of the guidance, the way that the SEC handles most of these things is that the guidance comes from the corporation finance division. That's the division that advises companies about what they're looking for in disclosures and what their filings should entail. And there's a little give and take with companies about their public disclosures. But the enforcement division then, after the fact, in hindsight, looks at these things and could, and I think very well will, bring enforcement actions regarding any number of supply chain related issues. There were a lot of enforcement actions already relating to COVID, with people coming out with products that promise to cure COVID and things like that, where the SEC, shut those down and has brought enforcement actions. But those things are still happening. And so the SEC is busy, obviously, overworked. There are a lot of priorities there in Washington. Yeah. And I think that there are still investigations that are going to play out. And I do expect to see more enforcement action relating to supply chain issues.
In some cases in the past, when the SEC has put out a new or an expanded type of ruling for disclosure, it's given companies a kind of a grace period before they're actually going to be held in noncompliance, and penalties will be assessed. Is that the case here, or is it just right off the bat they need to be doing what the SEC is telling them to do?
Well, certainly there's no grace period described in any of the guidance. But certainly, the use of discretion and the lack of resources at the government, I don't think the SEC is going to be ticky-tacky on these things. I think they're looking for pretty extreme violations. The plaintiffs bar, though, and I'm sure you're aware that there have been a slew of securities class actions about these same kinds of things, where investors sue companies all the time. When a company says that it's had this supply chain disruption, investors lots of times jump on and say, well, you should have disclosed that sooner. Those things are always going on, but the SEC is, picks and chooses the more egregious examples, but there's no grace period per se.
Yeah. This being the SEC, I assume we're talking only about public companies? Publicly traded companies?
Publicly traded companies, but also investment vehicles. There are a lot of mutual funds and other investment vehicles and financial advisors who invest in any number of funds and things that certainly have supply chain issues. And so when those funds go to market, the SEC is looking for them to also disclose about supply chain issues.
Do you think that companies are well equipped to provide this information? Do you think there's any challenges they have in coming up with the insights the SEC is calling on?
Oh, absolutely. Far-flung worldwide organizations certainly have a very difficult.
You say difficult time.
Well, I think it is hard to know exactly what's going on in other parts of the world. We have a team of people here at the firm who advise companies about those kinds of things, and how is that information, gathered. I think the challenge is to know what's going on at various parts of the operation. And certainly since COVID, companies have had to work really hard to find out what's going on in lots of different jurisdictions with respect to supply chain and human resources and a lot of different topics. So I think companies are coming to grips with this. Certainly, it's not easy.
What is your advice to companies that need to, in order to, catch up and adhere to these new rules or expanded rules? What should they be doing?
Well, you need to have people on the ground who know what's going on, and you need to have a system for that information to make it to headquarters and to make it to typically what we refer to as a disclosure committee, where the information's coming in from various parts of the company, various parts of the world, to the right people who can then decide what needs to be disclosed and whether that information rises to the level of being disclosed in the company's financial statements.
Bryan House of Foley Lardner, thank you so much for talking to me today about these new disclosure guidelines issued by the SEC and what companies should do in order to comply with them. Thank you very much for your time.
My pleasure, Bob. Take care.